Hey guys, Toby Mathis here, and today I'm going to be going over the Corporate Transparency Act and what you need to know in order to comply. So, this is basically beginning in January 1st, 2024. So, beginning in 2024, this new law will impact almost all the small businesses out there in the United States. The vast majority of new businesses are going to have to comply with this thing starting on January 1st, 2024. If you are an existing business, so existing businesses that were filed with the state before January 1st of 2024, you have a year to comply. So you're not worried about this until January 1st, 2025. You actually have a very long runway. So if you're an existing business, go like this. Whoo! If you're a new business, you better be working with a good professional or a good organization like Anderson, because we're going to make sure that you comply right away. In fact, filers are going to actually have requirements to file as well, letting the world know I'm somebody who files documents on behalf of other people. So we're going to be doing that. All right. So what is the Corporate Transparency Act? Well, let's talk about it. Congress passed it in 2021 as part of the National Defense Transparency Act to bolster the United States anti-money laundering laws. Too many crooks were using shell companies and bouncing them around to do their dirty deeds. And this is a way we could figure out who are the individuals behind this. This is a way to make sure that they cannot launder money and do other financial crimes without detection. So how does it affect me? Well, quite honestly, this is just paperwork. You've already pretty much complied with this thing under the Bank Secrecy Act because the banks have this thing called Know Your Client. So if you opened a bank account for an entity, chances are it's just going to be that same information, but it's going to be to a government agency. The banks were required to gather information on who it was that was the beneficial owners of the business to make sure that you were a real person, that you weren't doing any skullduggery. And so if you opened up a bank account for an LLC, corporation, or trust, they verify your identity. This is just doing the same things with the United States Treasury under their something called Financial Crimes Enforcement Network. So this is for crooks, not for you. This is a Financial Crimes Enforcement Network. In fact, write this down. FinCEN, FINCEN. That's what it is. That's the Financial Crimes Enforcement Network. And that's our government trying to stop money launderers and crooks, scam artists and things like that from doing their stuff. So this is actually a good thing from the standpoint of it's just the government. Now, what about the whole world? Can't they see that I'm the beneficial owner? No, this is not a public record. The same way that your tax returns are not a public record, neither is any of this information. Now, what does FinCEN want to know? They want to know who the beneficial owners are of certain types of entities. This is called a BOI, Beneficial Ownership Information Report, BOI report. And it's basically people who own 25% or more of a business or who control the business. In other words, they're in a senior management. I'm actually going to pull their brochures up, all their information. We're going to go over it together and I'll explain it so you can actually see what they're saying. So they're going to have to file information relating to the identity of these individuals who are in control or who have 25%. That's it in a nutshell. FinCEN wants to know who owns or control certain types of businesses. That's it. There's nothing else more nefarious. The Corporate Transparency Act applies to certain entities that are filed in the U.S. or registered to do business in the U.S. if they're foreign. So it applies to both domestic and foreign entities registered to do business in the United States. Think LLCs, corporations, limited partnerships, filed trust, in other words, trusts that file for protection underneath the certain states. I'm thinking of Delaware and Wyoming just right off the top of my head. They'll be covered unless they fall under an exclusion. If an entity files with the Secretary of State or similar agencies, it's probably going to need to file. I think there's 23 exclusions. We will go over them here in a second. What do you have to do? What does the entity have to do? Well, it has to file a BOI report annually. You need to include your business's legal name and its trade name or DBA name that your business might have which means you're going to also have to include the business's address, the jurisdiction where it was first formed or registered, and you're going to need to include that business's EIN. What is an EIN? The employer identification number. It's the tax ID number of each of these businesses for each of the beneficial owners, or basically for each business. You're also going to have to include any beneficial owners. And these BOIs, beneficial ownership information, these reports are going to ask for anybody that has a greater than 25% interest or who is in control of that. You're a 10% interest holder, your name, you're not filing anything. But if it's 25% or greater, or if you're one of the people in control, your name's going to go on there. And even the filer is going to have to report it. So it's going to include their legal name, the birth date and address, or, and the identification number from like a driver's license or passport or other approved document. Again, we don't have the report yet from BOI, so we don't know. And it will include an image of that document so they can verify it. They just want to know this is who that individual is. It's a beneficial owner, or if it's somebody who exercises substantial control over the reporting company. That's it. Basically, they're going to have a report that you are filing when you do a new entity, or if it's an existing entity, you're going to be filing it in that first year. If it's the report of a new entity, it's going to be done within 90 days. So this isn't like something that, oh my gosh, anytime I file this, I'm like, I am under the gun to get this thing done. Year two, I think it's going to be 30 days. But if you are filing an entity, you're just going to make it part of that checklist. I'm going to do this, file it. As soon as I know it's filed with the state, what am I doing? Right now, you're typically getting an EIN for that entity. So you're already dealing with the Treasury, you're dealing with the IRS, and you're just going to do this CTA report, the BOI report at that time. So when is this thing effective? When is this Corporate Transparency Act? Like, when is it effective? January 1st, 2024 for businesses that file brand new. Otherwise, existing businesses, you have until January 1st of 2025 to get it done. Now, I mentioned exceptions, and I'll go over those in the brochure that they go out, but there are 23 categories of businesses that are actually exempt from the CTA. The CTA also does not apply to sole proprietors, people that don't have any entity, and it does not apply to general partnerships or unfiled trusts. Now, I'm going to say that unless it is the owner of an entity, in which case if the trust or a partnership it is the owner of a filed entity, then it's going to be the beneficial information on that trust or general partnership or sole proprietor, right? There's always going to end up being an individual that is going to be reported as the owner, or let's say it's a controlling trustee, if it's a living trust or land trust or personal property trust or one of the, or an asset protection trust or things like that. If there's a trustee that's in control, they'll be reporting. Otherwise, it's going to be the beneficiaries. Even the grantors could be listed. So we're looking for, again, trustees, partners, individuals, somebody who's in actual control. What does the report look like? No clue, because they haven't showed us. We can't file yet. We'll know on January 1st of 2024, because they're not accepting reports now. So nobody really knows what it's going to look like and how it's going to work. We just know that they said you do it online, and they're going to open it up on January 1st. Similar to, again, when you're requesting EINs with the for a business, I imagine it's going to be something that once we get it worked out, like most organizations, it's going to be pretty much cookie cutter, and they're going to know exactly who they have to file for, what they're going to file, and we're going to file it directly with FinCEN. Again, it's not a public record. Remember, existing businesses are not worried until 2025. So just take a big whoo. If you have an existing small business, there's exemptions. Big businesses are part of that exemption. New businesses, you have 90 days to file in 2024. Starting in 2025, new businesses, you're going to have 30 days under the existing law. So it's going to get a little bit faster. But this first year, it's the break-in period. They're going to try to figure out what works. If information changes, like if you sell a business, things like that, you're going to have an update. So you're going to have to do those within a certain period of time. And right now, I think those updates are 30 days. It might be 90 days in that first year, but there's going to be a period of time. Again, we will find out once we see what this actual report looks like. Now, what are the penalties for noncompliance? These are all over the internet right now. Everybody's like, oh, you're going to go to jail if you don't comply, and you're going to get fined $500 a day, up to $10,000 per entity. All right, that's possible. That's if knowingly, voluntary, like you're knowingly not filing. Most people, again, if you have an existing business, you have a full year, unless you put your head underneath, in the sand, you're going to know whether or not you have a filing requirement. Folks like Anderson, we're going to let you know, hey, you have a filing requirement. We need to do this. You're doing it at the same time, generally, that you're doing your state filing. So it's going to go like this, hand in hand. And you have an annual filing. Typically for tax returns, if it doesn't file a tax return, you already know it's flowing to another entity. You're going to be reporting the beneficial interest of those entities pretty much at the same time. They're really after the crooks, guys. They're looking for the money launderers or people that are involved in financial crimes, not you. You're not going to get beat up by this thing. And remember, if you use anonymity, there's nothing wrong with it. It doesn't destroy anonymity in business planning. It's really only 6 agencies that can even request the information. So it's agencies that are involved in national defense, state law enforcement, the Treasury, banks with your consent, because like they may want to verify who it is that's in charge and actually, who are the BOIs of this business. Well, this gives the bank somebody, hey, I can go to FinCEN and see whether or not it matches up. So the bank will be able to do it, regulators, and then foreign authorities will be able to work through a U.S. agency to determine whether or not somebody is a BOI. So I imagine that there's going to be a mechanism that everybody's using to basically see, once they're investigating either somebody or a business, that they're going to be able to share some information. Now, speaking of sharing, I'm going to share my screen and actually show you what it looks like when you're dealing with FinCEN. So this is the actual brochure that they put out there on FinCEN, the U.S. Department of Treasury, and their Financial Crimes Enforcement Network. This is what the actual report looks like. Not super long. It basically says, here's the new federal law or federal reporting requirements for BOI, beneficial ownership information, just like we said. It says who has to report, and there's something called reporting companies. And your company may be a reporting company, need to report if it is a corporation, limited liability company, or otherwise created in the United States by filing a document with the Secretary of State or similar office under the laws of a state or Indian tribe, or a foreign company that was registered to do business in the U.S. Through a U.S. state or Indian tribe by such filing. That's who has to report. Who does not have to? Well, there's a bunch of exceptions, and I will show you those. It's not here. It's on another section, but I'll actually report it. When do I report? Well, here it is. Reports will be accepted starting January 1st of 2024. If your company was created prior, you'll have until January 1st of 2025. If anybody is trying to get you to pay for a report and doing a filing in that first 30 days, just say thanks, but no thanks. We really want to let this thing work itself out. You have a full year. If your company was created on or after January 1st of 2024 and before January 1st of 2025, you have 90 calendar days after receiving the actual or public notice of your company's creation. So the Secretary of State, once they accept your entity, you have 90 days from then. Again, these are not super strenuous timelines. If, like most of the time, somebody files with the state, they want to know that the state's accepted it. Then they go and they request your employer identification number. Then they're going to immediately do this FinCEN either as soon as they get that number, because it's going to be part of the reporting. And that's what most companies are going to do. Again, this is probably why you want to be working with a company that's good at doing this, that's doing all of the filings, as opposed to just when it does a state filing, because you could get yourself in hot water if you use one of those online services where that's all they're doing. You want to be looking, like, realistically, when you set up an entity, you got to get that operating agreement done if it's an LLC or bylaws. If it's a corporation, you're issuing shares, you're getting the tax identification number with the feds. This is just going to be something else you're checking in. State filing, federal filing. Let's make sure that we're just putting this into that same group of like, here's the things I want to do. And that's it. Like, this is not a long pamphlet. What it does do is give us kind of a check link to a guide that actually walks you through this. So here's the FinCEN. You can actually see that number up there. You can see it right up there, FinCEN compliance guide. And you just go right on through in this guide here. I'll go all the way up to the top so you see what it looks like. Small entity compliance guide. Why does it say small entity? Because one of the exclusions is going to be big entities. So we're going to make it. Now, remember, the reporting requirements are not in effect until January 1st of 2024. That's why I'm putting this out now. Like, there's been people yakking about this for 2 years, right? But we don't know until we actually start interacting with FinCEN as to what we're actually going to have to do. All right, we'll get on into this thing, and it actually walks through, do I have to report who is a beneficial owner? Does my company have to report its company applicants, things like that? That's really for guys like me. What specific information do I have to report? When and how should my company file its report? Are there, what if there's changes or there's inaccurate information? What do I have to do? This lays it all out. I'll try to put links to all this so you guys can go grab it too, but it breaks it all down. And you can actually see, here's the reporting rule. It was issued on September 30th of 2022 underneath the section 6403 of the Corporate Transparency Act. So like, all of this stuff has been in progress. It was passed in 2021, but they've been coming out with the regs and all the information since then. And again, we still don't even have, as I'm sitting here in 2023, in December of 2023, I still don't have what that report looks like. We will get that on January 1st. That's what we'll start. And it'll basically lay it out. Again, if you're an existing business, you have until January 1st of 2025. If it's a new business, we're figuring this thing out and we're filing it more than likely when you're actually doing all your filing. All right. Does my company have to report its beneficial owners? It's actually handy dandy. So we'll go through this. They actually give us a little matrix. I'll go right to it. Under what laws was my company created or formed? Here's the U.S. Then it says, is the company a corporation? Yes. Maybe a domestic reporting company. Is the company a limited liability company? Yes. Maybe a reporting. If it's no. Was the company created by filing a document with the Secretary of State or similar office under the law of a state or Indian tribe? Yes. Maybe a domestic reporting. If the answer is no on all of those, is it a corp? Is it an LLC? Was it filed with the state? Then you are not a reporting company. You go over here and it says, was I created with the laws of a foreign country? And then has it registered to do business with the U.S.? If it hasn't, it's not a reporting. If they have, then it may be. The reason they say may is because there's a bunch of exclusions, which we'll go over. Here's the exclusions. There's 23 of them. A securities reporting company, because they're already disclosing all this. Government authority, a bank, a credit union, a depository institution of a holding company, a money services business, a broker or dealer of securities, because they're already, again, putting all this information out there. They've already done this. Securities exchange or clearing, an exchange act, an investment company, venture capital, insurance, state licensed insurance producer, commodities and exchange, an accounting firm. Again, these are already under different state, like there's already disclosure, there's licensing requirements. They're going to make you an exclusion. Public utility, financial market utility, pooled investment vehicle, tax exempt entity. So this is not, like, the Corporate Transparency Act is not for 501c3s. It's not for 401ks. It's not for IRAs. All of those are excluded. An entity assisting a tax-exempt entity is even covered. Large operating company is an exclusion. And I'll just tell you right now, we'll go down to what that is. But if you have 20 or more full-time employees and you have gross receipts of $5 million or above, you are a large operating entity. You do not have to You do not have to comply. If you are a subsidiary, like an LLC of an exempt entity, you don't have to comply because, again, there's no BOI on that. There's nobody that is an owner of that exempt entity. And then there's an inactive entity. And there's actually a checklist that they use. Again, they're all down here. Like we could go through all of these and you could see whether or not you fall underneath one of these categories. You could just answer the questions. You go to the exemption. It's like, here's a large operating company. Do you have 20 full-time employees? And it gives you the definition and how to calculate it. Somebody 20 people working more than 30 hours a week. Yes. Are they employed in the United States? Yes. Does it have an operating physical office in the United States? Yes. All right. Did they file a federal income tax where they showed more than $5 million in gross receipts or sales? Yes. Is the entity reported greater than $5 million amount gross repeater sales on the entity's 1120 or 1065 or 1120S? Basically, did you file a tax return? Yes. And then you go under this, is the gross receipts greater than, when you look at sources outside the U.S., are we still more than $5 million from the U.S.? Yes. Then we are going to be an exemption and we're not going to have to comply. So the entity complies if you hit all 6. Boom. You just check this thing off and you don't have to file. And then you have other exclusions. What's another good one? Inactive entity. Was the entity in existence before January 1st of 2020? Yes. Is it engaged in business, or entity is not engaged in business? Yes. So you have to answer yes to all 6. And then, is it not owned, by a foreign person? Yes. Has it not experienced any change of ownership in the last 12 months? Yes. Did it receive any funds of greater than one, or has not received funds of greater than 1,000? Yes. Then does not hold any type of assets, including any ownerships in LLCs or other corps? Yes. If you answer yes to all of them, then it's exempt. So you just go through that. What is a beneficial owner of my company? I would actually suggest that everybody go through this and read this, their words, not just somebody on the internet, not just my words. But remember, it's exercises substantial control or owns at least 25% of a reporting company. If that's you, then you're going to be listed. And again, a reporting company can have multiple owners, multiple people that have substantial control. What is substantial control? They actually give us a whole bunch. Senior officers, they have the ability to remove or appoint senior officers. They're an important decision maker. And this could be like a CFO or for the structure of the business. And there's even a catch-all. And they're just looking for somebody basically who has the ability to control what this structure looks like. What is an ownership interest? Equity, an interest in profits, convertible instruments, an option holder. And then again, they have a catch-all because what they're basically saying is, hey, if you're getting the benefit of this, then we're going to list you as somebody who has a substantial control over that entity, or who has a major ownership interest of 25% or greater. And then they go through some examples, and gives you all this stuff of steps you can go through to determine who is somebody that has that substantial control. Then they have a bunch of questionnaires that you can use. And again, they're just looking for anybody. If in doubt, you're probably going to be filing this because there's no downside to actually filing it. You're just giving them information so that they can make sure no bad things are happening. Again, in a perfect world, it'd be great if we didn't have to do these things, but I understand why they're doing it. And I don't really begrudge the government from saying, hey, too many people are flaunting the U.S. laws and taking advantage of our people and evading lawful tax when, the rest of us are playing by the rules. This gives them a tool to stop that stuff. Keep going through. You can actually go through more examples, for example, of what a reporting company is. and then who owns what in it. They go through different layers, so they'll break it down. Hey, what if it's the owner of the owner of the owner, and they start breaking it down. Who's the manager? Like, here's a great example. Here's a reporting company, and it's owned by two other companies, of which there's different ownership of those two companies. And it's basically saying who is going to have to report. They give you all the examples so you can make a decision. And then it talks about who qualifies for an exception. There are some exceptions, like a minor child, it's going to be their parent. Or if you're an intermediary or custodian of something, then it's going to be the actual person that has that's the beneficiary. Think IRAs and things like that, or a nominee on behalf of somebody else. Or again, the minor children, that's pretty easy. Or you're an employee of an organization and you don't have a bunch of substantial control over it, you may be exempted. And then there's also for inheritance and creditors. So there are some exceptions to all of the rules. Like when a reporting company is, there's 23 exceptions. When are you somebody who has substantial control, there might be an exception. And when you have a 25% or greater, there might be some exceptions to those. And again, just go through this brochure. It's actually very, very clear and very good. Company applicants. This is when a company is actually filing documents on behalf of somebody else. So this is for folks like me. I'm not gonna make you guys go through that. This is for companies that have to do it. We'll go through that. What specific information does it need to report? So I went over this a little bit earlier, but you actually get to see it. For the reporting company, its full legal name, its trade name, its U.S. address, the jurisdiction. We don't have to worry about if it's non-foreign, the EIN, the taxpayer identification number, and then for each beneficial owner you're listing, full legal name, date of birth, the address for that individual, and a unique identifying number, which means like a U.S. passport, driver's license, or identification document issued by a state or local government. And if they don't have any of that, their foreign passport. They're looking for something just to verify who you are, and you go through that. So it's not rocket science, guys. It lists it, and then how will it actually file? This is where it gets fun. The initial reports are going to be something that is put out there on FinCEN's website. And again, the reporting requirement is effective. We just don't have those yet. And then you could actually see for existing companies, it's until January 1st of 2025. For new reporting companies, you have 90 calendar days. There's a bunch of bad information out there. There's a whole bunch of folks saying it's immediate, or that you have 30 days and you're going to get fined and all these bad stuff. They're just trying to create some fear for you right away so that you turn over your money to them. You don't realize how easy this is, or that there might be somebody else who's doing it on your behalf already as part of their service. And then after January 1st of 2025, new companies are going to have 30 days. How does it file? It actually lists it out here. It's under development and it's not going to be available until January 1st. Anybody that says, I have the report, this is what it is, and it's not January 1st of 2024, stop listening to them. And then there's another portion that says, hey, what if there's changes or inaccuracies? And it shows you, here's how long you have. They basically say 30 calendar days. Just make sure that you're keeping up on this and reporting it. Again, the penalties are really for willful people who don't inadvertently do stuff, but who are willfully not reporting stuff because they want to do all sorts of skullduggery. And again, this is just a tool, so they have something else that they can hit these folks with when they're willfully doing bad actions. So I hope that helps demystify it. I know I went through a lot of material in 30 minutes. And just remember, there's resources. I'll make sure that they're in the links in the show notes so you can go get it and you can actually look at it yourself. Don't just blindly follow somebody on the internet or even your professionals. You want to look at some of this stuff yourself and make sure that they're not asking for things that you don't have to provide. They're not charging for things that are not actually required. Maybe you're underneath one of those exemptions. Maybe you realize that there's information that should be reported and your professional may not know what they're doing yet and they're still learning. And would be helpful if you actually know, and then you could say to them, hey, I looked at it, and based off of this information, I think I should be reporting something, so that you don't inadvertently, following somebody else's advice, put yourself on the radar of somebody who might get hit with those fines, or God forbid, the criminal actions if you're doing something that you didn't realize was wrong because somebody else was advising you to do something that was erroneous. We see that all the time. But there's bad promoters out there doing all sorts of weird stuff, and you're looking at it going, oh my gosh, this is clearly illegal activity, but you didn't know, and you're being advised to do something. Especially those tax protesters, they drive me nuts. Or they're doing some crazy structuring that you know in your gut is wrong, but this is the tool they're going to use to harm those that were getting illegal benefits or doing bad things. You want to make sure that you don't fall onto that side. So you can look at this stuff yourself, and it's not, again, rocket science. It's pretty clear, and you should be able to have a conversation with your professional. If you say, I look at this and I believe there might be XYZ, they should be able to come back and say either, hey, here's why that's not the case, or they might just say, hey, thanks. Yeah, all this stuff is new. And they're going to be continuously updating the regs and information and their website. We know that that's going to happen. And you just have to be able to roll with it a little bit. And just spirit of the law, we're just trying to be as transparent as humanly possible. There's nothing out there that hurts us by doing this. They already know it's part of your banking. It's part of your tax filing. All we're doing is sending it over to financial crime so that they can determine whether or not somebody is engaged in some bad behavior. Maybe they're not filing these things, and it gives them a tool to actually start to correct that bad behavior. Again, it's not for people like us. It's for the money launderers out there, the people that are doing financial crimes, and it just gives our government another tool to use against it, to put it to an end, or hopefully to prevent it from continuing to happen. Maybe we'll get some of these folks to stop doing it and messing with us over here in the United States. If they're overseas, maybe this puts them on the radar and they say, you know what, no thank you, I'm going to leave the U.S. alone. Or if it's a U.S. company, it gives them another tool to recognize it and be able to stop some of the bad behaviors, and especially the money launderers out there doing, all these different entities that they're paying this one, that one, this one, trying to avoid lawful taxes or engaged in other bad behavior. This gives them another tool to stop it. So I'm not advocating on behalf of our government on this one. I'm just saying I understand exactly why they passed it, why Congress passed it. And the spirit of it doesn't hurt lawful citizens who are using appropriate strategies. I just want to make that clear. If you are setting up like your real estate so that there's anonymity, you don't want people to know what you have, this does not hurt you. This is not a public record. It's not going to harm your anonymity. It's going to allow you to continue to be able to use your plan the way it was intended. All this is doing is giving our government a tool to stop money launderers and people doing financial crimes. That's not you. That's a bunch of other folks. And I can't blame our government for wanting to put a halt to it, because there's a lot of bad stuff that's going on out there. All right, guys, if this is helpful to you, please like and subscribe and share it with anybody else. If you have comments or you want clarity, by all means, go ahead and put them down in the comments, and I'll answer as many as I can. My staff monitors our comments as well. So if you say like, hey, where can I get this? Or what about this? Or what about this question? We'll do our best to get you answers as quickly as possible. Otherwise, hopefully this helped demystify it a little bit and give you some clarity on what it is. I know, again, I've been getting blown up on people going, they're going to throw me in jail, or I'm going to have to do this or the other. And I understand I'm going to have almost no time to do it. Just take a breather. This is not super critical. Nothing in here. Like just that first year, you got 90 days, even on the stuff that you do file that's brand new in January. Everybody else has a year. We have plenty of time to digest this and make sure that we're acting appropriately. And again, it's not a ton of information that they're actually asking. It's going to be something that's fairly easy to do. We just want to make sure that we do it for any entity that it is required for. If there's an exception, that you know what it is so you can document it for yourself, because you're not filing at all. And again, these things will really be popping up if you get caught money laundering. That's when they're going to put this at you and hit you with it. It's not for those that are doing things legally and doing your investments and doing things for your family legacy and stuff like that. That's not who it's intended to hit. All right, guys, hopefully you benefited from this. Until next time.